Yes. So now you can check audio and video. Yes, all of you, now you can check the audio and video clarity. So then we can start our discussion directly with this chapter. Yes. So now you can check audio and video. Yes, all of you, now you can check the audio and video clarity. So then we can start our discussion directly with this chapter. Yes, ma'am. So in today session, we are trying to cover the business restructuring and reconstruction chapter. So any idea about weightage, ma'am? So confirm 7-mark descriptive question they will give. Okay, if our luck favors, then they will give one more MCQ. Totally 9 marks weightage. So the many students are asking the doubt related to, sir, before business restructuring chapter, we need to learn the capital gain chapter. Yes, the many are asking this is a common doubt. Sir, we want to start the business restructuring chapter, sir. Now, do I need to learn the capital gain chapter first, then after we have to start the business restructuring? In my view, not required. Yes, here we are doing the capital gain tax treatment only in every case. But we know basics of capital gains already. Whenever in-depth discussion is required for the capital gain chapter, we'll cover. So definitely here we are discussing the capital gain tax treatment only in all the cases. Whenever the basics are required, already you know. Whenever in-depth knowledge is required, so definitely I will cover everything. Okay, so now what are the concepts we are going to learn in this chapter? Yes, just I will give you the brief analysis about this chapter coverage. Yes, what is that? Business restructuring and reconstruction. Yes, in this chapter, what are the things we are going to learn and what are the problems we have to do also, I will tell you clearly first. Yes, tell me, ma'am. Business restructuring means the first amalgamation. What is that? Amalgamation. Second one, any idea? Demerger. What is that? Demerger. Third one, so conversion of the sole proprietorship concern into company. Conversion of the sole proprietorship concern into company. Next, conversion of the partnership form into company. Yes, and another business restructuring we have any idea? Private company or unlisted public company, not listed ma, unlisted public company now converted into LLP. These 5 business restructuring and reorganizations are there. In all the cases, we have to find out the tax treatment. The accounting treatment, you know already in other subjects. In our business restructuring chapter, okay, if this business is restructured in these ways, yes, what is the tax treatment we are going to learn. Okay, so next, additionally, we have one more thing, but we are already covered this concept in the, yes ma, 6th one. Yes, already we know in all the business reorganization how to calculate the depreciation. If any business reorganization is happen, how the depreciation we can calculate, how we are going to apportion the depreciation. Yes, second one, depreciation, how to compute. Next concept is what ma? Apportionment of depreciation. What is that? Apportionment of depreciation. Remember, this already we discussed in which chapter ma? PCBP. Yes, you can watch that lecture. In that depreciation concept I explained how to apportion the depreciation between the predecessor and successor also we discussed. Can you tell me here who is a predecessor? Sole proprietor. Successor, company. Predecessor, partnership form. Here, company. predecessor, successor. Depreciation, how we can compute and how we are going to apportion between the predecessor and successor also we discussed clearly. Now, the last very important in my point of view, but not at all tested in last 5 examinations. Any idea? Slum sale. Okay, in every attempt, okay, in my analysis, that is only the first concept. Because before 2022 December exam, 22 December exam conducted in 23 January. Okay, before that, the standard question in our CMA final examinations is slum sale. But after that, they forgot to give this question in our examinations. At any time, they can give this question. What is that one? Next one, slum sale. So totally, can you tell me what are the concepts we have to discuss in today's session? Yes, except this concept, everything we are going to cover. Except the depreciation and apportionment of depreciation, everything we are going to learn in this chapter. Remember, if slum sale is done, what is it? How to calculate the capital gain. In all the cases also, what is the tax treatment we'll discuss. The first our target is what? Slum sale. Shall we start our discussion with the slum sale concept? Definitely, I am expecting this question for 7 mark in the upcoming examinations. Okay, shall we start? All of you, yes, in online, if you have any issues with the audio and the video, please give me message in the comment box, then I will try to check it out. Otherwise, this session will be done without recording. Okay, now we'll discuss the slum sale. In slum sale, I will try to do the 3 to 4 questions. Okay, 3 to 4 questions. The first session will start with the concept of slum sale. Listen carefully. If you know the theory, no need of any person help also for doing the problems. Okay, yes, while starting the revision also, please do slum sale. Then after, in which order I am going to cover, in that order only you can go. Now, we'll start the slum sale concept. Yes, we'll take the example for better understanding of this concept. Can you tell me, who is an SSC here? Mr. A. He have a factory. That factory established in which year? 2005. In which year? 2005. This entire factory we can call it as undertaking. Now that undertaking entirely we can take it as what? Capital asset. What is that? Capital asset. But this entire undertaking is in losses from the last 5 to 6 years, sir. So that's why he want to sell this entire undertaking as an entity to others. Sir, I don't want to sell one building to one person, machinery to one person, land to one person. If I am selling an individual asset separately, I will not get much consideration. If anyone have an intention to continue the factory business, entire unit I will sell. Yes, now I find a buyer. I am transferring this on which date? 5/1/2026. Can you tell me which year? Previous year, 25/26. You know some basics of capital gain. Capital gain we have to calculate if 2 conditions are satisfied. One is an capital asset, another one transfer. When we have to calculate capital gain? In the year of transfer. Can you tell me, we have to calculate the capital gain in the year of transfer, but we have to follow the separate section for computing capital gain. What is the separate section? Section 50 capital B. Slum sale, if anything is done, we have to calculate capital gain under separate section. What is the separate section? 50 capital B. Understood? Now, so I will tell you what are the assets are involving in this factory. Buildings are there, plant and machinery, furniture, stock in trade, intangible asset, land, and unsown assets are there. Now, as an unit, we are transferring to others, right? Okay, what is that actual consideration we are receiving for transfer of this entire undertaking? 50 lakh. But this fair market value, remember our entire undertaking fair market value is 70 lakh. Yes, you have an capability to sold it for how much? 70 lakh. But you sold actually it for 50 lakh. So that means here also we are trying to do the what? Tax avoidance only. We are selling intentionally for less than its fair market value. So while calculating the capital gain, you want to show the sale consideration as an how much? 50 lakh instead of 70 lakh. Forget about it. We'll discuss one more time. Now, can you define the meaning of slum sale, all of you? Yes, slum sale meaning ma, sale of one or more undertaking. In this example, we are selling one undertaking only. You can sell one or more undertaking for what ma? Lump sum consideration. In our example, what is a lump sum consideration? 50 lakh. What is a lump sum consideration? 50 lakh. Without assigning the values to the individual assets. Without assigning the what ma? Values to the individual asset. Sir, if you ask the consideration, I can say 50 lakh. If you ask how much you received for building, how much you received for plant and machinery, can I segregate? No. So as a lump sum, bulk consideration I am receiving, I don't know how much I received for each and every individual asset. The type of sale only called as what ma? Slum sale. If slum sale is done, we have to calculate capital gain separately under section 50 capital B. Understood? Now, so okay, we decided to calculate the what ma? Capital gain. Sir, always you know, capital gain computation will be in two types, short term or long term. How we can calculate the short term capital gain or long term capital gain ma? If that capital asset is long term capital asset, long term capital gain. If that capital asset is short term capital asset, short term capital gain. Now, how to decide one capital asset is long term or short term? Here, what is that capital asset ma? Entire undertaking or unit is treated as an capital asset. Yes, that period of holding we have to check. Remember, period of holding, if that is more than 36 months, long term. In our example that was established in which year? 2005. Now we are selling in 2025-26. Can you tell me more than 36 months or less than ma? More than 36 months. That's why in our example, it is treated as what ma? Long-term capital asset. So less than or equal to 36 months period of holding is there. Remember, equal to also, less than also, we can treat that as a short-term capital asset. Understood? Ma, remember, in capital gain chapter, if you refer, we have two period of holdings only. Yes, ma. Capital gain related amendments we got. Yes. What is that, ma? On or after 23/7/2024, if you transferred any capital asset, we have to check the period of holding only how many months, ma? 12 months, 24 months only. There is no 36 months classification. If transfer done on or after what date ma? 23/7/2024. But still for slum sale related capital asset period of holding depending upon how many months? 36 months. Don't forget that point. If more than 36, long term. Less than 36 or equal to 36, short term. Next month. Okay, sir, we decided to calculate the capital gain under section 50 capital B. Yes, I given here as a long term. What is the reason, ma? In our example, we have to calculate the long term capital gain, right? Okay. Sir, particulars and basic format, you know already. Particulars and amount. Gross sale consideration. Sir, generally, what is that amount we received in our example? 50 lakh. If you taken 50 lakh, it is tax avoidance, right? So that's why we have to take the fair market value 1. What is that, ma? Fair market value 1. What is your entity fair market value, ma? 60 lakh. What is that entity fair market value? 60 lakh. That is only FMV 1. Okay. What is that actual consideration we received? 50 lakh. That is nothing but what, ma? FMV 2. Yes, ma? FMV2 is simply our actual consideration only. FMV1 means our entity fair market value. Nothing but if you observe, all these assets fair market value is how much, ma? 60 lakh. What you received, that is FMV2. And it is what? FMV1. So now FMV2, FMV1, we have to take whichever is what higher. Remember, this computation should be done as per that one rule. I will explain you that rule also. The rule 11 UAE. So here, okay, you know already. Actual consideration is how much, ma? 50 lakh. Actual consideration is how much? 50 lakh. So fair market value 1 is how much, ma? 60 lakh. You have to take whichever is higher, how much, ma? 60 lakh. If any transfer expenditures incurred related to slum sale, yes, please remove. Then you will get what ma? Net consideration. Even though it is a long-term capital asset or long-term capital gain also, here we have to take the what ma? Cost of acquisition only. Remember, in case of slum sale, there is no concept of indexation. There is no concept of indexation. In your examination question, even though they given the cost inflation indexation factors, ignore that simply. Because in slum sale computation, they are not giving any indexation benefit. Okay, sir, how can I calculate the cost of acquisition of every asset, sir? From 2005 onwards, I purchased many assets, sir. If you observed in this classroom, every bench is an asset only. So everything, many assets will be there in any undertaking. That's why it is a difficult to calculate the what cost of acquisition. So that's why in 50B computation, yes, cost of acquisition is simply deemed to taken as an what net worth. So please calculate the entity net worth, and after removing the net worth from the net sale consideration, in this example you will get the long term capital gain. Either you can get the gross short term capital gain also. Yes, capital gain exemptions you know already. If you remove the capital gain section 54 series exemptions, what are that ma? Section 54 series exemptions, yes, you will get the net long term capital gain. Ma, can I call this as an, yes, some cases you will get the net short term capital gain also. But why I written only long term? Because in our example that is a long term capital asset. Ma, understood? Remember, in capital gain computation related to slum sale, there is no indexation. Yes, instead of cost of acquisition, what we have to take? Net worth. Understood? Now, sir, this is an income or tax? Income. On that income, we have to calculate what? Tax liability. How to calculate the tax liability? Simply on this, we have to apply the what? Tax rates, right? Special tax rates, right? Yes. Now I will tell you tax rates related to slum sale. Yes. You got an long term capital gain, right ma? You got an what ma? Long term capital gain, right? Yes, that is taxable under section 112. What is the tax rate? 12.5%. What is that? 12.5%. Sir, 12-year rate also how much ma? 12.5. Ma, remember, I am discussing these tax rates on or after transfer done on or after what ma? 23/7/2024. Because in our exam always our previous year, yes, definitely what ma? On or after this date only. Remember these rates first. No need to remember that amendment before dates. Amendments before dates are not required to remember. Remember. Sir, why 112, sir? 112A capital gain only for 3 assets. Listed equity shares, equity oriented mutual funds, units of business trust. Here other than the 3 assets, that's why what ma? 112, what is that? 12.5. Next ma, short term capital gain. Short term capital gain, taxable at the what ma? Normal tax rate. It is 111A, 20%. Other than 111A, what is the rate? Normal tax rates. Remember this, in exams mostly they will give the long term and you have to apply the what ma? 12.5. If they given as a short term capital gain, you have to apply the normal tax rates only, not special tax rates. Now, our target to compute first what ma? Net worth. Listen carefully, I will take much time for theory. Problems easily we can do within 5 minutes. The presentation may be taken time, but rough calculation easily we can do. Remember, while you are doing the net worth computation, only think about the net worth computation. Okay. In future, we'll calculate the FMV1 and FMV2 also. Don't merge everything. If you want to calculate net worth, forget about everything. Only net worth format you have to remember. Okay. Yes. Tell me ma, net worth means, yes, I will tell you in a easy way. Okay. I will tell you in easy way. Insiders capital, that means what ma? Equity, reserves and surplus value, how much ma? 40. How much? 40. Next, outside liabilities, how much ma? 60. Total assets value, how much ma? 100. So now, net worth means always remember total value of total assets. Your assets value totally find out. Minus what ma? Outside liabilities. Then you will get what ra? Net worth. Simply can I call net worth means owner funds, right? Owner funds. Sir, if anyone is asking your worth means, can you say all assets value? No. Your liabilities also please remove. Then that is only your worth, right? So in this way you can calculate in shortcut way. Simply what is that? Equity share capital plus reserves and surplus, we can call it as what? Or you can call share capital plus what ma? Reserves and surplus also. Now, but this is only now I am calculating total value of total assets minus what ma? Outside liabilities. Are in asset side, we haven't different assets, right? Okay, depreciable, non-depreciable, cash, stock, many assets will be there, debtors. For each and every asset, what is that value we are going to take? What is that value we are going to take? Tell me, total value of total assets. What is that? Total value of what ma? Total assets. Sir, in your balance sheet side, if depreciable assets are there, look at the screen, depreciable assets are there. What is the value we are going to take ma? Ma old version lo etakoddu undadu. Okay, time waste chesko screen. Okay, what is that? Depreciable assets are there. Ma, how we can say depreciable assets on that asset? If you computed depreciation in earlier years, that is an depreciable assets. Okay, yes. What is the value we are going to take ma? Opening WDV as per section 43.6. Sir, in PCBP I explained what is that 43.6. Simply opening WDV plus cost of additions minus money receivable on sale. You will get depreciable value. From that you can reduce the depreciation. You will get closing WDV for the last year. That is only opening WDV for the present year. So that is only. If slum sale done during this year, what is that opening WDV of that asset? Next ma, if that is a self-generated goodwill, what is that value you have to take? Nil. Ma, remember, if that is a purchased goodwill, yes, you can take the book value. You can take what ma? Book value. If that is a self-generated goodwill, nil. If that is a purchased goodwill, book value. Ma, if any asset already we claimed section 35 AD deduction. Ma, section 35 AD deduction you claimed means 100% of that asset cost already allowed as what ma? Deduction. Now, for the purpose of computing the net worth, what is the value we have to take? 0. Remember, what is the value we have to take for computing the net worth related to 35 AD ma? Nil. Self-generated goodwill? Nil. Other assets, any other asset other than above 3, yes, that is non-depreciable assets. Example what ma? Non-depreciable assets, purchased goodwill. What is the value we have to take ma? Book value. So simple ra. They are not giving 100 computation. They given only 4. Depreciable assets, opening WDV as per Income Tax Act 1961, not as per our books. Okay. Purchased goodwill, book value. Depreciable assets, opening WDV. Non-depreciable, book value. Purchased goodwill, book value. Self-generated goodwill, nil. 35 AD assets, nil. I think you know, in our books of accounts, we can do always what ma? Revaluation. Please ignore the revaluation effects. Sir, 100 rupee is in book value. We revalued to that 150 ma. While computing the net worth, we have to ignore the revaluation. That means what is the value we have to take ma? Before revaluation 100 rupees, that 100 rupees only you have to take. Ignore the revaluation effect. How much revaluation? Upwards done 50. But we don't want to take the revaluation figures while computing the net worth. Some cases, if you are doing business very well, yes, you will get more and more losses. Negative way. Okay, more and more losses. On that occasion, proudly, if you calculated the net worth, you will get what? Negative net worth also. Possible. Possible. So then, if negative net worth is we got in our question, so yes, for computing that capital gain, the net worth, yes, we have to take in as what? Nil. If positive, then you can reduce from the sale consideration. If you got positive, then you will get the reduce it from the net consideration or sale consideration. If you got negative, yes, here take 0. So don't forget that. Maybe they can test this way also. Okay. If negative is there, cost of acquisition shall be considered as what? 0. Next. Understood? Now. So here we have to take the one rule. What is that rule? Rule 1-1-UAE. Right? In this rule, what we are going to compute? FMV1 and what? FMV2. Sir, I don't know how many of you are felt this concept as a difficult. In entire chapter, this is only easy. That's why I started this is only as a first concept, first remember. Before that, you don't know this computation. That's why maybe you felt it as a difficult. In our study material also, they given this rule, but not in that much of depth. But exam, definitely they will ask the rules related FMV1 and FMV2 only as a question, remember. Okay. Shall we start FMV1 and FMV2? Yes. Remember, sir, what is that FMV2 simply? Sir, we transferred our undertaking. We taken some consideration, right? That consideration related fair market value we have to compute. Sir, in our example, what we received? Cash. How much cash? 50 lakh. So 50 lakh related fair market value also what? 50 lakh only. Sir, simply whatever we received from the buyer, that related fair market value we have to compute. Simply it is what? AC. What is that AC? Actual consideration ka fair market value. What is that? Actual consideration related fair market value. Okay, sir. I am receiving only cash. Then cash value, we have to take it as what? Cash only. 50 lakh only. Fair market value will change for that cash? No. Second, sir, I am receiving the non-monetary assets from you. Okay, you given the 40 lakh cash, 10 lakh worth of land you given. So I am transferring the factory to you. You given cash some amount, and remember remaining you given as an what? Non-monetary assets. Now, if any non-monetary assets are there, I have to calculate what? Fair market value. Sir, some cases you given the non-monetary assets, but for that fair market value is not available. Example, you given diamond. Diamond fair market value, how we can check? Regularly, if that is trading is done, we can check the fair market value. So that's why we have to take what? Open market value. That means the registered value related report we have to take. That is only open market value. Yes, ma. Remember, here shares example please take, not land. So here shares example. Movable. Sir, immovable, if you given the land, which value I have to take? Stamp duty value. So here you can take example diamond or any stones, etc. Okay, that is only the formula they are giving it as an E plus F plus G plus H. So cash, which value? Cash only. Yes, ma. Immovable property, which value, ma? Stamp duty value. Non-monetary assets, some cases fair market value. If fair market value is not available, open market value. Understood? Yes. These non-monetary assets are what? Movable. These two are what? E and F and G are what? Movable. Immovable always what? Stamp duty value. Movable, some cases fair market value, some cases open market value. Please let me know what is that consideration we found. Whatever we received, that fair market value. Now, what we given factory, right? Factory fair market value we can find out by using the FMV1. Whatever that asset we transferred here, what is that asset we transferred? Factory. That factory fair market value we can find out. That is only A plus B plus C plus D minus what? L. Here we are ended with the D, right? Here we started with the E, F, G, H. What is that E, you know, F also, G also, H also, you know. But now we can concentrate on the A plus B plus C plus D means assets total minus liabilities. Liabilities means which liabilities? Outside only. Outside only. Now tell me, suppose, okay, liabilities you know already. Liabilities means which liabilities? Outside liabilities. What value we have to take? Book value. In net worth computation also. Yes, in net worth computation also, liabilities at what value we consider? Book value only. What are the outside liabilities? Example, debentures, creditors, bankers loan, etc. Remember, assets value we know, liabilities value we know, liabilities value at book value only. In FMB1 also the same. Once you computed the outside liabilities at a book value, that we can use at how many places? 2 places. In FMB1, in net worth also. Understood? Yes. Now, next point. Yes. In your asset side, if immovable properties are there, that is considered at what? Stamp duty value. Remember, this computation only for FMV1. Previously, for calculating net worth, yes, all the assets, depreciable, open WD, non-depreciable, book value. But here we taken at what? Stamp duty value. So that's why I'm saying you can confuse between the two computation. While calculating net worth, only net worth provision. While calculating FMV1, only FMV1 provisions. Remember, don't merge those two things here. Next one, if shares and securities are there in your balance sheet side, what is that value you can take? Fair market value. Jewelry and any other thing is there, artistic works, etc. Fair market value. The remaining all assets you can take what? Book value. All assets means other than B, C, D. In B we can cover the jewelry. C we can cover the shares and securities. D we can cover the immovable. Other than that, if any assets are there, can you tell me any other asset means what? Cash, bank balance, debtors, etc. Can you tell me these are cash, debtors, bank balance covered here? No. Stock also not covered. What is the value we have to take? Book value. The remaining assets, which value we have to take? Book value. But from other assets, please reduce the net income tax paid. We paid 1 lakh income tax. They given refund 75,000. What is the net amount we paid? We paid 1 lakh. They given 25,000 refund. What is the net income tax paid? 75,000. And unamortized amount. If any deferred revenue expenditures or unamortized amounts or anything is there in the balance sheet asset side, please remove from the figure A. So, understood all of you. Now I will ask you questions. Tell me. Now I am asking about net worth computation only. What is that? Net worth computation only. Think carefully and tell me. How to value the outside liabilities? Book value. Okay. Book value. Examples of outside liabilities, debentures, creditors, bank loan, etc. Right? Okay. Now, while calculating the net worth, yes, depreciable assets value, what we have to take? Opening WDV as per Income Tax Act 1961 under section 43(6). What is the self-generated goodwill value? Nil. Yes. What is the purchased goodwill value? Book value. What is section 35 AD asset? Nil. What is that non-depreciable assets value? Book value. Understood? Now revaluation figures? Ignore. Negative net worth if you got, you have to take it as what? 0. Net worth you have to take it as 0. Now I am going to compute the FMV1 and FMV2. What is that, ma? FMV1 and FMV2. So what is that FMV1 formula? A plus B plus C plus D minus L. L means here outside liabilities. Please remove the outside liabilities at what value, ma? Book value, which is similar to net worth computation. So what is a D, ma? Immovable property. What value? SDV. What is a C, ra? Shares and securities. What value? Fair market value. Jewelry, artistic and etc. Fair market value. A means what? Any asset other than B, C, D. Some examples: stock, debtors, cash. What value? Book value. But from this we have to reduce the two things: unamortized amounts as well as what, ma? Net income tax paid. So then you will get the fair market value 1. It is our asset transferred related value. What we transferred, for that asset we calculated the fair market value. Fair market value 2 is nothing but in consideration to the transfer of our asset, we received what, ma? Some amount. Sir, if you received only cash, cash. If you received immovable, SDV. If you received any non-monetary movable asset, some cases fair market value, some cases open market value. Understood, all of you? So now with this help you can do any question also, but I want to tell you 2 note points here, ma. Generally, if I am transferring the stock at a profit, which head of income will attract? PCBP. If I am selling my stock in trade at a profit to others, I will get which income? PCBP. But under slum sale, stock, if anything, is transferred to the other person also at a profit or not a profit, we don't know. That is taxable under which head, ma? Capital gain only. Remember, we are selling all our assets for that lump sum consideration. So that's why, yes, ma, no profit under the PCBP shall arise even stock is transferred in the slum sale. Because stock related effect also we have to consider in the capital gain chapter. Otherwise you will get a confusion. Remember, slum sale done, every asset tax liability is always under capital gain. Next, net worth computation is very difficult thing. So in order to support the net worth computation, we have to brought the CA certificate or CA report. Shall we? Yes. Now I will tell you 3 to 4 questions here. Okay, all questions we can try to do roughly, but in exam please present everything clearly. Okay, now I will tell you. Workbook you can open. Slum sale questions will start from the question number 9. Now I will start now question number, that means directly will start the big question, that is FMV1 and FMV2 question only I will start. Question number 16 I will start directly. What is that? Question number 16 I will start directly. Shall we do, okay, ma? Question number 16, page number 88. First we will start this question. Listen carefully, all of you. Online, please give me confirmation about audio and video. So again, one more point. Again I will say, while doing net worth, please think about net worth computation only. Only net worth computation. While thinking FMV1, FMV1. While thinking FMV2, FMV2. Okay. Forget about other. Now, Sriram Enterprises. A proprietorship having how many units? 2 units. So out of the 2 units, unit 1 is transferred on the first day of the previous year by using the slum sale. What is the consideration we received? So that is only we can call it as AC or FMV2. AC or FMV2. Unit 1 started in which year? 2005-6. All of you, please tell me whether it is long-term capital asset or short-term capital asset. Long-term capital asset, because the period of holding is more than 36 months. That expenses incurred for connection with the slum sale is 38,000. 38,000. Sir, how you know, sir, it is FMV2? Because cash only we received as an consideration, that is only AC. In other words, we can call as per the rule, that is only FMV2. Ma understood? Now, which unit I transferred? Unit 1. So I have to target the unit 1 assets and unit 1 assets and unit 1 liabilities. Ma, what are the liabilities related to unit 1? Please calculate. Bank loan for unit 1, please calculate 70% means how much? Online students also can do the computations. Yes. Tell me. 2 lakh 80,000. Okay. Can you tell me what is a trade creditors? 87,500. Visible? 87,500. Now, yes, we can discuss the first point. Ma revaluation reserve is there. How we created the revaluation? Ma revaluation upwards done of the land. Sir, while calculating the net worth, I have to ignore the revaluation. While calculating net worth only, I have to ignore. Okay. So now, how much revaluation done? Ma 5 lakh. Before the revaluation, yes, how much value of the land? 8 lakh. Sir, how you know, sir? Because clearly they are saying land 1 only, we are doing the revaluation. How much increased here? And here we created the ratio. The revaluation upwards done land how much? Ma 5 lakh. Now, if you ignore the revaluation effects, how much amount of the land? Ma 8 lakh. Understood? Now, this is very important. Anna, why they given this? Any idea? Stamp duty value of our land they given. This is for FMV1 computation. Whatever that assets of ours, we have to value, right? Ma, in fair market value 1, please look at the screen. While calculating fair market value 1, our immovable properties, land related, which value we have? Ma, stamp duty value. If they are not given this, we can't calculate the FMV1. So that's why actual consideration only we have to use for solving the questions. In basic questions, they will not give the land fair market value, land stamp duty value. Ma, here the land net worth computation time, what value we have to take? Book value. Book value can you take with revaluation? No, we ignore the revaluation. But while calculating FMV1, land which value we have to take? Stamp duty value. Clearly they given. Okay. Sir, all questions in our asset side, immovable properties are there. They should give stamp duty value for the purpose of which computation? FMV1. Otherwise, we cannot calculate FMV1 directly. FMV2 or actual consideration, whatever given in the question only, sale consideration. Understood? Yes. Now, what is that? Second point, read and tell me. Slum sale definition. Next, patents acquired on which date? 1/7/2023. They are not charging any depreciation. Ayyo. So, this value is right or wrong? Wrong. Patent is depreciable one, but they are not charging the depreciation. So, can you tell me the patents is what more? Depreciable capital asset, but they forget to charge the depreciation. Last, they given the value of machinery. How much is there? 4 lakh. That value, machinery is depreciable or non-depreciable? Depreciable. That value is as per the what? Income Tax Act 1961 only. That value is as per that Income Tax Act 1961. That means it is only opening WDV as per 43 subsection what 6. So now they are asking what ma? Compute capital gain. They are not asking tax only capital gain income. Sir, if you are giving help, then I will try to compute roughly. Okay. So what is a computation of what ma? Capital gain. What is that? Computation of capital gain. That too here, which capital gain we have to compute? Long term capital gain. Yes, basic format roughly I am calculating particulars and what ma? Amount. Particulars and amount. So first we have to take the gross sale consideration, right? Ma? Gross sale consideration, right? Please tell me, gross sale consideration means FMV1 or FMV2. Yes, whichever is higher. FMV2 we know already. How much FMV2? Please check the question. How much ma? 14 lakh. But I have to calculate the FMV1 by using the working note number 1. Shall we calculate? Okay. Ma FMV1 I am calculating. First A plus B plus C plus D minus L. L means what? Outside liabilities. At which value ma? Book value. Yes ma? Outside liabilities. Please look at the question and give me help ma. Outside liabilities at what value ma? Book value. Outside liabilities, book value. Please look at the question. What are the outside liabilities we have to? That to unit 1 related only we have to take. Book value already we computed proportionately 2,80,000 plus ma 2,80,000 plus 87,500. Next ma D means what? Immovable property. Yes, immovable property. Yes, which value we have to take ma? Stamp duty value. Please look at the question. Yes, immovable property is there or not ma? Yes. What is that immovable property ma? Land. Stamp duty value they given? Yes. How much ma? 10 lakh. Stamp duty value they given how much ma? 10 lakh. Tell me C is what? Shares and securities. Is there any shares and securities? Shares and securities we have to take it an FMV, but here we don't have. Next one ma, jewelry. Yes ma, jewelry and artistic related. Which value ma? Fair market value. Is there anything is there? No. Other than this, what are the assets we have ma? Machinery, debtors, patents. What value? Book value. Please take purely book value. What is that? Machinery ma? 4 lakh. Ma 4 lakh. Debtors 2 lakh. The patents 2 lakh 50. You know already this 2 lakh 50,000 is wrong. Why da? Depreciation not. We don't want to check that. What is that book value? Please do total. 4 lakh, 2 lakh 50,000. Yes ma. Any other assets? What value? Ma book value. Please tell me what are the other assets related book value ma? 4 lakh plus ma 2 lakh 50,000 2 lakh plus 2 lakh 50,000. Ma please simplify and tell me what is the fair market value 1 you will get. Ma book value means even though that is wrong we can't do anything. Please take book value only. Yes, how much it will be? 14 lakh 82,500. Yes sir. FMV1 we got and FMV2 already we substituted 14 lakh. Yes, how much it will be ma? So simplify total thing. Amma, after doing simplification you got this right? Now 14 lakh 82,000. Now tell me whichever is higher. 14 lakh 82,500 or 14 lakh, whichever is higher. 14,82,500. So less transfer expenses. Yes, please check the question. How much transfer expenses they given? 38,000. Yes, finally you will get the NC net consideration. How much ma? 14,44,500 minus we have to reduce the cost of acquisition, but instead of that I can take the net worth by using working note number 2. I will calculate the net worth. I will calculate the net worth. Shall I calculate the net worth ma? Yes, you know net worth computation. Yes, net worth computation is total value of total assets minus outside liabilities. Yes, please tell me first assets related values ma, one by one assets, land ma, what value we have to take? Non-depreciable net worth computation, book value we have to take, ignore the revaluation, what we have to take ma? 8 lakh. Ma, land we have to take at an 8 lakh, ignore the revaluation. Next one ma, machinery is depreciable, opening WDV also the same, so that's why how much ma? 4 lakh. Understood ra? 4 lakh. Now debtors book value, what is that ma? Debtors ma, here book value, opening WDV, debtors book value, how much ma? Debtors 2 lakh. Next patents is there. Yes, patents related we have to take the opening WDV. This we have to perform by using the working note, because the patents value given is incorrect. Now we have to calculate the patents value. Ma, remember patents purchased on what date? Ma, 1/7/2023 we purchased with how much amount ma? 2,50,000. Ma, patents is intangible, right? Okay, depreciation rate is how much? 25%. Depreciation at the rate of 25% for the previous year 23-24. Why full rate? Because put to use is more than 180 days. We can give the full rate of depreciation. Yes, tell me how much depreciation ra? 62,500. Closing WDV for that 23-24. Opening WDV for the 24-25. How much ra? 1 lakh 5. Yes. Now again we can reduce the depreciation at the rate of 25% for the previous year 24-25. Last year. Yes, reduce the depreciation and tell me this is only closing WDV on 31st March 2025 and opening WDV for that our year, right? Yes, 1/4/2025. How much it will be? 1,40,620. Depreciation, please tell me ra? 46,875. Ma, we have to take the depreciable assets at what value? Opening WDV as per section 43 subsection 6. This is only opening WDV for our year. Yes, 1,40,625, right? Ma, understood? Yes, it is an total value of total assets minus outside liabilities. Array, already you know outside liabilities don't calculate again. FMB1 and net worth related assets is one and the same. How much we can take ma? 2,80,000. 2,80,000. Next 87,500. Ma, please remove assets. Total value of total assets at what value we taken and outside liabilities at what value? Book value. Please remove. You will get net worth. What is that ma? 73,125. 11,73,125. Net worth 11,73,125. Finally, you will get a net long-term capital gain. How much? 2,71,370. Correct? 2,71,375. They will give this type of questions even for 14 marks also if they given your attempt is in safe mode. But if you are taken any wrong value, you know FMV1, FMV2 and the net worth everything. But if you taken any wrong value, our answer will be wrong. So that's why while calculating FMV1, please remember FMV1 points only. While calculating FMV2, FMV2 only. Net worth points only remember. Sir, in this question, common doubt students are asking. Sir, how you know, sir, FMV1 and FMV2 both we can compute? Remember, FMV1 computation purposes, immovable property related SDV is required. So clearly they given immovable property related what ma SDV. So that's why I computed FMV1 as well as what ma FMV2. FMV1 as well as what ma FMV2. Clear? Now I will take the one more question. Listen carefully. Question number 10. Question number 10. Question number 10. Very easy, na? Shall we? Yes. Lakshmi Limited transfers its unit X to Aminra. So nothing but what is that asset transferred ma? Unit X. Yes. Sir, they have in 3 units. One unit they are transferring. What is that unit they are transferring ma? X. So what is the date? 31st December 2025. In this year only they done slum sale. Sir, what unit we transfer? That unit related all the things I will highlight it. Okay, I will highlight it. Now listen carefully. They given the first point, cost inflation indexation factor, irrelevant or relevant for slum sale? Irrelevant. But clearly here one important point I can understood. Our unit is established in 2007-8. So that's why our unit is long-term capital asset. Consequently, we can get long-term capital gain. What is the lump sum consideration we received? 1100. It is only AC or FMV what? 2. FMV 2. Now tell me, they given clearly fixed assets of unit X. What is that ma? Fixed assets of unit X. Yes ma? Includes what? Listen carefully all of you. Includes the what ma? Vacant land that is purchased in which year? 7-8. For how much amount we purchased? Ma? 50 lakh. Now that is revalued for how much ma? 100. That means in this 700 land is how much? 100. It is what? Revalued figure. We have to ignore this and we have to consider book value at what? 50. Because the 50 only original value. We revalued for what? 100. So that's why we ignore. We have to take the, yes, how much value for the net worth computation? Book value only. Balance how much is there? 600. Clearly they given next point. Other fixed assets reflected how much ma? 600. That 600 related depreciable assets ma? Clearly they given which WDV they given means what ma? Depreciable. Okay, 600 are depreciable assets but depreciable assets related opening WDV as per Income Tax Act 1961 is how much ma? 200. So nothing but yes, we have to take the 200 WDV as per section 43 subsection 6. Sir, for what purpose we can consider this? Net worth purposes we can take this. Ma? But while calculating the FMV1, this land, which value we need? Stamp duty value. In this question, they mentioned or they didn't mention? They didn't mention. That means, can I calculate FMV1? No. If FMV1 is not able to compute, this is only we can take what? Sale consideration. Yes, no need to get confusion even in exam. Simply, this fact is enough to calculate what? FMV1. Land FMV1, yes, if land is there in our asset side, this land, which value we have to take? SDV. In the last question they given clearly, but here they given or not given? Not given. Can I calculate? No. Now, what is that? Sale consideration ma? Simply, sale consideration is how much ma? FMV2 only. That is only what? Actual consideration. Understood, amma? FMV1 computation is very easy. But land related, which value we need? SDV. In this question, they mentioned or not mentioned? Not mentioned. That's why we can't compute. So that's why we can take whatever that FMV2 is given as an actual consideration. That is only sale consideration. Now, next one. Net worth computation we can do. Sale consideration minus what? Net worth. Please take calculator. Unit X asset, WDV related 200 plus, land book value 50 plus, other assets book value 650 plus, minus 400. How much you will get? 500. We removed 500. What is the long term capital gain? 600. Understood all of you? Sir, many students are asking, sir, here I want to calculate FMV1 also, sir. Or you can calculate, and that is time waste only because the data is incomplete. Okay. Now the question number 9 ma. Here ma, what is the sale consideration they taken ma directly? Actual consideration only they taken ra. Okay, that is what? Actual consideration or FMV2. Okay. But here land related, our asset related, book value given. This book value for what purpose we will take? Net worth purpose. Stamp duty value also given ra. FMV1 can I compute? Yes. You can compute both ra, but answer will be this is only higher. Okay. Yes, here FMV1 and or FMV2. Yes, it is only what ma? Actual consideration. You can take whichever is higher. Ma, in this question, if you solved also, you will get this is only higher. But that's why they are not given the detailed computation. But here, you able to compute the FMV1 purposes, they given this. You can compute FMV1 also. You can compute FMV1 also here. So, okay. I will compute that extent only. FMV2 you know, FMV1 we can compute here itself. What is that FMV1 ma? Outside liabilities. Okay, A, B, C, D minus outside liabilities. Please tell me outside liabilities what we have ma? Debtors only. Sorry, creditors only. What is the book value of creditors? 50 lakh. So minus 50 lakh. D ma, immovable property, SDV ra, immovable property, SDV, how much ma? 70 lakh. C is what ra? Shares and securities, not available, jewelry, not available, others, yes ma, others, machinery, furniture, stock, debtors. For these, which value we have to take? Book value. Please do total 70 lakh, 50 lakh, 30 lakh, 40 lakh. How much ra? Ma? 1? Ma, remember other assets which value ma? Always book value. other assets always book value means you can take this. How much you will get? 170. Yeah? Ma, please do total 70, 50, 30, 40. 190. రే చెత్త మొహాలు ఒకటి వేసుకున్నారు. 190 lakh. So summarize everything and tell me what is the answer you will get. 210 lakh. You can compare the, yes ma, this is an 210 and this is an how much ma? 300. Whichever is higher? 300 only. Okay. Sir, net worth also, by the way, we can compute. Can you tell me net worth computation we can do? Please tell me net worth how to compute. Yes, total value of total assets minus what ma? Outside liabilities. Can you tell me outside liabilities how much ma? 50 lakh. Total value of total assets means land, which value ma? Book value. How much ma? 50 lakh. Plus machinery, opening WDV, depreciable means what? Opening WDV. How much ma? 60 lakh. Ma, understood? While I am doing the net worth, I am thinking only about net worth. Depreciable, opening WDV, non-depreciable, book value. Book value I taken. Next, furniture, depreciable, that's why opening WDV, 90 lakh. Yes, stock, stock, debtor, non-depreciable, that's why what ma? Book value. How much? 30 lakh plus 40 lakh. Please do summarize everything on how much net worth you will get. Sorry? 220 lakh. So, how much we can reduce ma? 220 lakh from this. Ma, understood? So, only the thing, while doing the net worth, please think about the net worth. While doing the FMV1, please think only about the FMV1. Sir, when I can get the FMV1 full information? In case of our assets, if immovable property is there, immovable property related stamp duty value is required for doing FMV1. Understood? Yes. 2 more questions I will discuss. Ma, understood this question, all of you? Question number 9. Basic question only, but here you can calculate both FMV1 and FMV2. Whichever is higher you can take, but they taken directly. Okay. 2 more questions. I will tell you what are the 2 more questions also. Question number 12. Now I will solve question number 12. Question number 13. There is some adjustment is there. That adjustment alone I will explain in this 2 questions. Then slum sale is clear. Okay. So please read question number 12 ma. Listen, ma'am, Kite and Co partnership firm sold all their assets to one company. Partnership firm selling their assets to one company, that means slum sale. Yes, consideration is how much ma? 500. It is only AC or FMV2, whichever is we can call, no problem. Next ma, they given all those things. Yes. Now, one point here I have to highlight. Must stock overvalued. That means revalued upwards. We can take original value. Okay. Next, here the land also revalued figure only. How can I know that land revaluation how much? 200. Originally 200 only, but we showed it as an what ma? 1200. Sir, these factors while I need to consider when I need to consider net worth computation. Okay. Mari, yes, in FMV1 computation, this land related which value we need? Stamp duty value. They given? No. So that's why this is only, we can take it as what ma? Consideration. Now, what is that important point ma? This is only I want to told it as an adjustment. Remaining things you can do anyhow. Loan and advances include. Yes, ma. Here we have a loan and advances, right? In that, including 150. That means in this 340, 150, yes, required to receive from the what, ma? ABC. Remember, yes, partnership form is there, kite. Partnership form is where, ma? Kite. And who is that another, yes, purchaser, ABC Private Limited. Ma, generally, what is the sale consideration they are required to give to us? Ma, for kite, ABC is required to give how much amount of sale consideration? Ma, 500 lakh. But ABC only required to give how much amount as an advance? Earlier they taken 150. Sir, can I do any adjust? No. That amount also they need to give. This amount also they need to give. I can't do any adjustment here because, yes ma, sale consideration how much I need to take, ma? 500 lakh. How much I have to take, ma? 500 lakh. Now I will calculate the net worth. Sale consideration, transfer expenses is not there, ma. Can I calculate net worth for all of you? Yes, ma. Please take the calculator and please tell me. I am highlighting with the red color. Ma, plant and machinery at a WDV only. Please take 300. Because plant and machinery, which value I have to take? WDV. They given the WDV. Land I have to take what, ma? Book value. Please add 200. Debtors which value? 500. Cash and bank balance how much, ma? 500. Loan and advance how much, ma? 340. Yes. Stock how much, ma? 100. Because 10% upwards is done. Please remove it. Yes. Total value of total assets how much, ma? Ma, book value, land without revaluation book value, sundry debtors, cash and bank, loans and advances. Sir, sorry, plant and, okay, sorry. Ma, plant and machinery, this is an WDV as per books. WDV as per Income Tax Act 1961 is how much, ma? 250. We have to take 250. Sorry, I didn't see that. Instead of this, how much I have to take? 250. Ma, WDV as per books given, but I want to take the WDV as per Income Tax Act 1961. Please reduce the all these outside liabilities at an book value. How much you will get? Sorry, 440. Ma, here what I want to say, yes, these loans and advances, they are required to give 150 and sale consideration also they are required to give. So book adjustments is not required. Both the things I have to receive. How can I adjust? They will give this loan amount also. They will give this consideration also. So that's why I don't want to consider this point here. Understood? Our asset side, one loan and advances means nothing but what, ma? I already given loan to them. They have to repay how much, ma? 150. But next question, next question, listen carefully. Yes, what is the unit we transfer? X. So that's why X units I will highlight. Unit X related assets, other assets as well as liabilities I will highlight. Listen carefully. Listen. Lump sum consideration is how much? Lump sum consideration is how much, ma? 1100. Lump sum consideration is what, ma? 1100. Now tell me, to whom that 1100 to give, ma? Lakshmi Limited can receive the amount from Amin how much, ma? 1100 lakh. Okay, nothing but remember, unit X owes how much amount to whom? Amin. That means unit X means to whom this one? Lakshmi Limited required to give how much, ma? 100 lakh. 100 lakh. Now, that amount is foregone by the buyer. In other words, after the set off only how much 100 lakh. So, generally that agreed amount is how much 1200 lakh. After this set off, because one amount they are required to give, one amount we are required to give. So that's why after set off, can you tell me how much 1100 lakh. Now sale consideration, how much we can receive? 1100 lakh. But our liability reduced how much 100 lakh. So that's why here liability we have to take how much 300 lakh. Understood? Simple 1200 initially, they are after setting off, they are required to give how much amount foregone by the buyer. Buyer is nothing but Amin. Amin is foregone this 100 lakh. Sir, generally in our terms 1200, but you are required to give how much? 100 lakh. So after set off of these two, how much will be there? 1100. Automatically our liability will reduce or increase? Reduce. Previously I have to give 400. After set off how much 300. Understood? Previous question, this question is different only. Because previously I have to receive both the things. But here I have to receive one thing, I have to pay another thing. Understood? These are 2013 exams questions. At any time they can give. All of you understood? The remaining facts are same only. Sir, here fixed assets related, land given fixed assets in that they given what land related stamp duty value they didn't mention So that's why whatever the consideration they given, that consideration only, yes, we can take FMV2 or actual consideration only for that what computation of capital gain. Remember, based on one value, we can decide FMV1 computation is possible or not possible. What is that? In our balance sheet, if immovable property is there, if stamp duty value given, then only we can compute which value FMV1 value. Otherwise, FMV2 only final. Clear? Understood? Now, so 100%, I think I discussed nearly 4 or 5 questions also here. What is the concept done now? Slum sale is done. Yes, slum sale done. Any doubts in slum sale? Remember, if any stock transferred on slum sale also, that stock related treatment also we have to do in which chapter? Capital gain only. Slum sale related capital gain computation we discussed in which section? Section 50, capital B. Understood? Yes, I will tell you that adjustment also. Listen, Okay, here I will give you tax computation question also. Tell me. Here, what is a capital gain? 60 lakh. Sir, capital gain means it is only what income. Our income is 60 lakh. Now, what is a tax rate? It is on 112 because long term capital gain 60 lakh into how much? 12.5%. How much you will get? 7.5. Here surcharge is not applicable. Reason SSE is company. Sorry, SSE is what? Partnership firm. For partnership firm, when we can add surcharge? If total income exceeds 1 crore. But here, income how much? 60 lakh. Students are asking, sir, sale consideration is 1 crore more. No. Sales and all the things irrelevant. Our income is how much? 60 lakh. So that's why surcharge is applicable or not applicable? Not applicable here. Understood? Income means capital gain income. Please check. Okay, one more question I will show you. Please look at the screen. Here capital gain how much? 200. Now, please calculate the tax. 200 into 12.5 plus. Now, surcharge is applicable. Why? It is company. 1 crore exceeds, right? 1 crore exceeds, what is the surcharge, ma? Next, what is that? Health and education says 4%. Please compute. Ma, simply, after calculating that, on that I calculated what, ma? Surcharge. On that I calculated, ma, telusa ee computational. Okay, how much you will get? 27.82 lakh. Ma, for calculation of surcharge, capital gain income, whether it exceeds the 1 crore or 10 crore, we have to check. In case of individual, 50 lakh exceeds or not, please check. Clear? Okay, now we can discuss the three more concepts as an set. Okay, I will tell you these three concepts as an set after the break. So please take nearly 20 minutes break. After that, I will tell you these concepts in a very simple way, and every concept related one question I will discuss. Every concept related how many questions, ma? Each question we can discuss. Next, after that means 1 hour I will spend with these concepts only. After that, we'll take the amalgamation and demerger. Okay. Shall we start, Ra? Yes, ma'am. Now we can start the conversions. So conversion of sole proprietorship concern into company, conversion of partnership form into company, conversion of company into LLP. So remember here successor is same, right? In first two conversions successor is same. So that's why first we'll discuss these two. Okay, shall we? Okay, with your permission, now I want to start very easy concepts in our entire income tax act. Okay, first, what is that, ma? Sole proprietorship concern is converted into what, ma? Company. Second one, partnership form converted into what, ma? Company. Yes, so that is during the previous year 25-26. As of now, we are doing the business by using sole proprietorship concern. Now we want to convert our legal registration into company. Here also the same. Which year, ma? During the previous year, 25-26, we want to convert. Upon the conversion, yes, predecessor is required to transfer their capital assets to whom, ma? Successor. Remember, yes. We are transferring the capital assets, right? Consequently, we are required to calculate capital gain. Here also, predecessor is whom? Partnership firm, and successor is nothing but whom? Company. Definitely, here we have to transfer our capital asset. Consequently, we have to calculate capital gain. But clearly, Act is saying that, yes, they are saying certain conditions. How many conditions here, ma? 3 conditions. How many? 3. Here they are saying how many conditions, ra? 4. How many conditions, ma? 4. If these conditions are satisfied, that is not treated as transfer, no need to calculate the capital gain. Who is not required to calculate capital gain? Sole proprietorship concern being a transferor. So simply we are providing the capital gain exemption to the sole proprietorship concern. Here also we are providing the capital gain exemption to the partnership firm. Sir, transfer excludes is given in section 47 in our act. This point is excluded from the transfer under section 47 subsection or class. What is that? 14. Here section 47 subsection 13. Sir, many are excludes from the transfer, but this point clearly excludes in this class. Here also what, ma? 47 13. Clear? Now, can I discuss the conditions first? If we discuss the conditions, that main part is over. So can you tell me, if you know these conditions, then no need to calculate the what, ma? Capital gain. When, if that all the conditions are satisfied. If all the conditions are satisfied. Understood? So first we'll discuss the conditions relating to sole proprietorship concern converted into what, company. Shall we discuss conditions from handwritten, ma? Yes. Please open conversion of the sole proprietorship into company. Sir, what are the conditions, ma? First condition, listen carefully. All the assets and liabilities of the predecessor required to become the assets and liabilities of whom? Company. All assets, all liabilities means here 100%, right? 100%, right? Next, second, ma? If any sole proprietor is there in sole proprietorship concern, he required to become the shareholder in the company. with at least 50% of voting right. How much ma? 50% of voting power. Means he needs to become the shareholder and he needs to hold how much holding in that company? 50% at least. And that shareholding he required to maintain at least for how many years ma? 5 years. Nothing but the lock-in period is how many years ma? 5 years from the date of conversion. So consequently, simply this conversion done, right? Conversion related, he has to receive only shares from the company other than shares. If he received any cash or any other asset, conditions violated. Only he needs to receive the what ma? Shares. Allotment of shares only he needs to receive. Other than if anything is received, conditions are violated. Understood our 3 conditions? Remember all of you. Remember, here we are talking about the capital assets if transfer. If all the conditions are satisfied, no need to calculate the capital gain. Right? Then what is that position if we are transferred the stock at a profit? If you transfer the stock at a profit, you are required to calculate which head of income? PCBP. Are in our books, in sole proprietorship concern books, stock in trade is 1 lakh worth. But we are transferring it to the company for 1,20,000. Now, what is that income we have to recognize in the hands of sole proprietor? PCBP, how much ma? 20,000. Sir, if we sold it for loss you have to recognize. Stock related effect in slum sale, capital gain only. But in this conversion, PCBP. Understood? Because we are talking about the capital gain treatment that is applicable for only what ma? Capital assets. Stock is not a capital asset. That's why if stock transferred at a profit, we have to calculate PCBP in the hands of whom? Predecessor. Understood? Now, I will left this discussion up to now. Now I want to check the conditions which are applicable for the next part. That is nothing but here we have in how many conditions ma? 4 conditions, right? Here 3 done. Now we'll discuss the 4 conditions what they given in the conversion of partnership firm into company. All of you? Yes. How many ma? 4. Ma, first condition is same. Yes. Predecessor all assets and liabilities 100%. Required to become the assets and liabilities of whom? Successor. Next, partners in the partnership firm. Yes ma. Partners in the partnership firm required to become the shareholders of the whom? Company. Previously sole proprietor required to become. Here partners all. If 5 partners are there, the 5 partners also required to become the shareholders of the company. But all together they need to hold how much ma? 50%. That is lock-in period is how many years ma? 5 years. But remember, 5 partners here, they have an capital ratio is there in the partnership from books of accounts, right? In the same proportion, they are required to hold the shares. Sir, partners having the, yes ma, remember their capital account ratio is there in partnership from books, right? In the same proportion, they are required to become the shareholders of the whom? Company. Sir, here equal 1:1:1:1. Okay, how many partners ma? 5 partners. 5 means nothing but every partner also contributed 20%. In the same proportion, they are required to become the shareholders of the company. But altogether, they are required to hold how much ma? 50. The remaining 50, they can give it to others also, no problem. But all partners together, how much at least they need to hold? Sir, next, partners can receive only what ma? Allotment of shares from the company. They cannot receive any consideration other than shares. But what is an extra condition? Proportionate of holding. Ma, this point is common or not earlier and this one. This is also what ma? Common. This is also comma. What is that new point? Here I given star mark. What is the new point? They are required to hold the shares in the same proportion as in their capital accounts. Clear? Ma understood? Sir, very easy discussion, sir. If you know the structure of the learning. Now, my point is, here these conditions, whatever given, we have to satisfy some conditions in future also. What are the conditions? 5 years lock-in period. Here also 4 conditions. Some we can satisfy now, but some we can satisfy in future years. What are the 5 years we have to hold? Now, in which year they taken the capital gain exemption? Previous year, 25-26, sole proprietor taken the capital gain exemption. Here also, in the previous year, 25-26, partnership firm taken the capital gain exemption. Some condition they satisfied, some condition they are given the promise to satisfy in future. Now, I will take the in future year, that is previous year, 29-30. Okay, 29-30. Conditions are violated. What happened? Conditions are violated. Possible? Yes, possible. What is the conditions are violated? Sole proprietor required to hold the, yes ma, how much holding ma? In this company 50, required to hold for 5 years. Here all partners are required to hold how much? At least 50, they need to hold for 5 years. Now what happened? Now what happened? In that future, conditions are what ma? Violated. Yes, I will tell you the simple way. I will tell you in a simple way. Yes, listen carefully. If the conditions are violated in future, what is the position? Section 47 subsection what ma? 14. Section 47 subsection what ma? 30. What is that? What is that ma? Sole proprietary to company. Partnership form to company. Now, in which year conversion happened ma? Previous year 25-26. Upon the satisfaction of the 3 conditions here, 4 conditions here, to whom we given the exemption ma? Tell me. So sole proprietor. That means sole proprietor as well as partnership firm. So simply predeceased are escaping the one tax, that is what ma? Capital gain tax. Understood? If conditions are violated in which future? Yes ma? If conditions are violated in future, in which year conditions are violated ma? 29-30. Whatever that amount exempted here, please calculate capital gain in this year only. Suppose if we calculated capital gain 2 lakh, we got how much exempted? 2 lakh. Whether that is short term or long term also, please calculate. Suppose here we got an exemption of the any capital gain, long term also, short term also, please calculate in this year, but no need to pay the tax. That is what ma? Exempt. That same amount of capital gain, yes ma, whatever earlier exempted, either long term or short term, how much amount also, now taxable in the hands of, whom? They are already died. Yes, these are already died. How we can create the tax liability in their hands? But sole proprietor is continued in the company, right? Partners are continued in the company, right? Somewhat. Yes, that's why in the hands of successor, in the hands of whom? Successor, in the year of violation. In the year of violation. How much? Whatever earlier exempted. Earlier exempted capital gain. Earlier exempted capital gain. Now taxable in the hands of whom? Already we discussed. Understood our logic? Because even though they got an exemption, but now we have to give the tax treatment in the hands of successor. Understood all of you? Again, yes. Now I will take the another point. Here sole proprietor is there as well as partnership form is there. Yes, that is converted into what company. All the conditions are satisfied. Yes, 3 or 4 conditions satisfied. 3 or 4 conditions are what satisfied. Now, in which year conversion happened 25, 26. If the sole proprietorship concern having the business loss or unabsorbed depreciation. What is that unabsorbed depreciation? Business loss means what it is a non-speculative. Speculative business loss, no. Non-speculative means normal business losses. Yes, this loss we can carry forward and set up in the hands of first during this year. Yes during this year we can this loss we can set up in the hands of whom company. If excessive loss is there, they can take the what carry forward to the next year by whom successor. Understood? Simply the predecessor losses can be set off by the successor, and if any excessive things are there, yes, we can do what carry forward. All of you understood? But in which year condition satisfied? 25, 26. So that's why we given the carry forward and set off point as a benefit. So now, yes this business loss can be carry forward in the hands of the company for that fresh period of how many years 8 years. Unabsorbed depreciation unlimited. Why? Even though they taken the setup for 4 or 5 years also, but we need to consider it as a first year loss in the hands of company. Business loss already they used it 4 or 5 years. Maximum how many years? 8 years. Already 5 years they enjoyed. Carry forward. Now remaining period means 3 years only. 5 years already done. But we want to carry forward remaining period or fresh period? Fresh period, because that is loss will be treated in the hands of company in the year of succession, that is an year 1 loss. Clear? Now here also twist is there. Now condition satisfied, so that's why you enjoyed the set off. Okay, example I will tell you. Yes you have a bumper profit 100 lakh. Now business loss we set off 80 lakh. Unabsorbed depreciation you set off the 15 lakh. Now you paid the tax only. That means business loss also 80 lakh is there. Here 15 lakh unabsorbed depreciation. Entire things you set off in this year and you paid tax only on how much 5 lakh. Now this condition satisfied. That's why you are doing the set off and what carry forward. Set off totally over. No need to carry forward. Every loss you are enjoying in the year 1 only. Now in future if conditions violated, what is that position? What is that? Okay, any year. Future means nothing, but we will take the previous year 28 to 29 conditions are violated. Can you tell me one example conditions violated means? Yes so they are required to hold the shareholding in the company for how many years? 5 years. They are transferred their shares. That means sole proprietor transferred, partners also transfer. If the conditions are violated, whatever the benefit you taken in earlier years, now in the hands of company. Who taken that benefit earlier? Company only set up the what losses. Who taken the benefit earlier how much benefit they taken entirely? 95 lakh. Now this 95 lakh will be treated as what? Deemed income in the year of what violation. In the year of violation, that is in the previous year 28-29, will treat this as an what? Deemed income. Understood, all of you? Sir, why you taken only 2 conversions, sir? We haven't 3 conversions, sir. The same treatment for every conversion, but why we are taken these 2 as an cetera? Ma, successor is common company, so that's why we taken this as an set. Understood, all of you? First thing, if you remember this, no one can stop you. Conversions is second preference in your preparation. After slum sale, definitely you have to refer the conversions only. Understood? Yes, 47, 13, 47, 14, 47, 30. First, condition satisfied, predecessor can take the capital gain exemption. If conditions are violated in future, the same capital gain is taxable in the hands of successor. 1 point is over. Upon these conversions, if conditions are satisfied, their losses can be set up by whom? Company. In future, if the conditions are violated, how much they set off, that is treated as which income? Deemed income. Done discussion. All of you understood online? Okay, here there is some work is going on outside, so that's why there is if any audio issue is there, please let me know. నాకు తెలుసు tomorrow ఇక్కడికి వస్తారు ఎగ్జాక్ట్గా ఆ రోడ్డు పగల కొట్టుకుంటూ. Okay. Online, please give me confirmation about audio clarity. Video okay, somewhat okay. Shall we? Shall we discuss one more conversion? Yes. Questions combinedly will discuss for the 3 conversions. What are that? Next conversion? Private company. Next one, unlisted public. Listed companies you can't convert. Unlisted company, that to unlisted public company, you can convert into what, ma? LLP. You can convert into LLP. Sir, upon this conversion, what is that point, ma? Definitely, we have to transfer our capital assets to the successor. Who is an predecessor and who is an successor, you know already. This conversion is happened in the 25-26. Yes, if these capital assets are transferred, that is not treated as transfer. No need to calculate the capital gain. If conditions are satisfied, please count the conditions. Tell me how many conditions are there? 7. I think 7 only, ra? How many, ma? 7 conditions are there. If these 7 conditions are satisfied, no need to calculate the capital gain because we are excluding this from the transfer under section 47. Transfer excludes always will discuss in section 47 subsection 13 here B. 14, 13, 13B. Ma, understood? Now we'll refer the conditions first. Previously 3-4 conditions we discussed. Now we'll discuss the what are the 7 conditions. All of you. We'll discuss the conditions directly from the handwritten. Yes, first condition is common. Yes, predecessor assets and liabilities that to 100% required to become the assets and liabilities of successor. Whoever the shareholders in the company, that all the shareholders required to become the partners in the LLP. This is also common. Next, ma, what we have to receive from the LLP? Only what, ma? Share in LLP. Sir, example, 3 shareholders are there. These 3 shareholders also required to become the what, ma? Partners. One logic I will tell you, okay? One logic I will tell you. Sir, 4 shareholders are there. How many shareholders? 4. Sir, always the fourth shareholder having the ego issues like urine. Okay. So 3 is in one line, the fourth one is always in another line. Now that company, that private company wants to convert into LLP. Now what is the position? Always if you want to convert, three shareholders will say okay, the fourth one will say what? No. So if he said no, if we converted, can they get the capital gain exemption? No. Because upon the conversion, one condition is what? All shareholders required to become the partners. But so this 3 will continue. He will get what? Money. So because you want to exit from these 3 persons. Now I will tell you one remedy. First remove him as a shareholder. Okay. Then any other will come, or there that means fourth shareholder shares also acquired by one existing 3. Okay, new shareholder will come, or existing shareholders only will buy the shares of the fourth person. Now issue solved. These 3 are in one line only right now. Now they will go for conversion. Now all the conditions will satisfy or not? Yes. Remember, if any disinterested partner or disinterested shareholder is there, first remove him. Then reconstitute the partnership deed or reconstitute the MOA, AOA documents. Based on that, if you converted, this condition will satisfy or not. This is only our last attempt 8 mark question. Okay, understood, ra? Yes, if any disinterested person is there in your company, yes, there in your company, or if any disinterested partner there in your partnership firm, first we will dismiss him. Then all are okay to convert. Now you can convert. Then these conditions will what satisfy. Understood? This is an 8 mark question given in earlier exams. Now, what is the shares we have to receive? Yes, I will transfer all the capital assets. Now I will get the share in what? LLP. Next one, the minimum, at least all the shareholders together, they are required to take the profit sharing ratio. How much? 50%. That means minimum 50% of holding is held by the whom? Shareholders. Lock-in period how many years? 5 years. Are these 4 are same, right? But what are the new things I will tell you? What are the new things I will tell you? Important are these 3 points. MCQ independently also they can ask. Shall we? Yes. Conversion before year. Conversion before. Immediately 3 years, please check. Conversion before means nothing but in whose hands we have to check? Company hands. Please check the company hands total value of assets. Total value of assets, how much in all the 3 years? 4.8 crores 1 year, 4.2 crores, 4 crores is there. If that does not exceed how much amount? 5 crore. Yes, remember, in all the 3 years, it does not exceed. Here remember, in every year less than what? 5 crore, then this condition also satisfied. Their assets itself more than 5 crores means that is in big companies. So if converted, then they are required to pay capital gain. They taken the what is that limit here in this section? 5 crore. Remember, here 5.8 condition violated. Any 1 year exceeded also condition violated. Understood? Yes, ma. Total value of assets related, okay. Next we have to check the, yes, ma, turnover of the or gross receipts of the company any previous year does not exceed what? 60 lakh. Previously what we checked? Assets value 5 crore. Here we have to check what? Turnover or gross receipts of last how many years? 3 years, 60 lakh. Not crores, lakhs only. Assets value 5 crore. Turnover 60 lakh. Next. I don't know how many of you know this F point related connection. I will try to explain. Please listen carefully. Generally in private companies, the structure will be there. Listen. My private company, okay, imagine the balance sheet. If they are given the dividend to the shareholder in the hands of shareholder, that is taxable under which head? Income from other source, right? But instead of giving the dividend to the shareholder, always they will not give dividend. If given the dividend, they can't take it as an expenditure also, because dividend paid is allowed as an expenditure while calculating PCBP. No, that is not an expenditure also. So that's why if they are given the dividend, ultimately who will affect the shareholder, because they are required to pay the tax. Instead of giving the dividend, they will accumulate the reserves and surplus balance, yes, to that extent maximum. Why? Two shareholders only there in the private company, entirely their money only. If they given dividend, shareholders are required to pay the tax. That's why instead of giving the dividend, they will accumulate the what? Reserves and surplus. Now, after few years, they will close this company. After achieving some amount, they will close this company. Upon the closing of the any company, that reserves and surplus will be distributed to whom? Shareholder. Now, it is also deemed to be treated as what? Dividend. You are not paying any dividend. Upon the liquidation, if any assets and reserves and surplus balance is distributed to whom? Shareholder, that is treated as deemed dividend under section 2 subsection 22 class C. Now, this is also taxable in the hands of whom? Shareholder under head income from other sources. You know this point already in any other chapter, just listen carefully. Now, two intelligent fellows are there. How? They are not liquidating this company, they are converting into what? Sir, this provision already who knows? All the shareholder will know. If we liquidate it, automatically, if anything we taken, that is also taxed under income from other sources, right? Now, private company converted into what? LLP. Now, these two shareholders are shifted from this company to LLP as an what? Partners. Now, automatically, that private company asset is what? Reserves and surplus, right? This is also what? Now, become the assets of whom? LLP. Now, they are taken from the LLP. Possible? Yes, intelligence can do anything. Now, actor, maker also is an intelligent. Now, yes, don't distribute the reserves and surplus to the partners for how many years? How many years? 3 years. They are clearly saying that, yes, if any reserves and surplus you got, so from that conversion date, 3 years, don't distribute. If you distributed, that condition is violated. Clearly they are saying, yes if you want to take the capital gain exemption, they are saying one more condition. What is that? Reserves and surplus, if you taken from the company, don't distribute to the shareholders for that. How many years 3 years. Understood the logic why they are putting this restriction? After 3 years, you can transfer, you can apportion. If any reserves and surplus is there, then you can distribute to the partners. But after conversion, how many years lock-in period? 3 years. If all the conditions are satisfied, who got the capital gain exemption? Who got the capital gain exemption? Yes, transferor, Puma. In near future, previous year, 30, 31, that conditions violated. That conditions are what? Violated. If that conditions are violated, what we can do? Yes, remember section 47 subsection 13b is clearly given the private company or unlisted public company converted into company Yes, in the previous year 25-26, we clearly said that yes, they are not required to pay the any capital gain tax in the year of transfer. Understood? But in which year conditions are violated, ma? 30-31. So what is that conditions can be violated in future lock-in period? Yes, you have to hold the whatever the shareholding you got in the LLP, you have to hold for how many years, ma? 5 years. You transfer that. So that's why clearly they are saying how much capital gain you got as an exemption. You got as an exemption in that year, the same capital gain now taxable in the hands of whom, ma? Taxable in the hands of whom, ma? Successor. Sorry. LLP. Okay, sorry. Okay, taxable in the hands of whom? LLP. In the hands of successor. Successor is whom here? LLP. How much? Earlier exempted, please calculate. Earlier exempted amount, yes, only taxable now in the hands of whom? Successor. Why? Predecessor already died, so that's why we can't give the tax treatment in their hands, but the same person is continued in the LLP, so that's why we can give the tax burden in the hands of whom? LLP. Clear? Now, one more point I will tell you. Who is a predecessor? Private company, unlisted public company, converted into LLP in that previous year 25-26. And how many conditions satisfied? 7 conditions also satisfied. Now here they have a business loss and they have an unabsorbed depreciation. Business loss is what, ma? Non-speculative. Non-speculative. Now, can you tell me, these are all the things can be, yes, ma? Set off. First we can do set off. In a excessive loss is there, we can do carry forward. Can you tell me, the business loss is an 8 fresh assessment years. Unlimited unabsorbed depreciation we can carry forward for how many years, ma? Unlimited. Okay, remember here who got the benefit, ma? Successor got the benefit. Sir, but here conditions now satisfied. In future also that conditions required to satisfy. In future, example, we can take random previous year 29-30 itself, conditions are what, ma? Violated. If these conditions are violated in any year, who taken the benefit of set off and carry forward? LLP. How much extent of benefit they taken? Yes, ma. In that year of violation, in the hands of LLP, we have to create the deemed income. How much earlier you reduced your income by using the set off and the carry forward. Now we can create as a deemed income in the year of what, ma? Violation. Ma, same provision. Same provision. Always the same. But conditions only different. 3, 4, 7 conditions only different. Ma, can you tell me any business loss is there? That business loss we can carry forward for 8 fresh assessment years and unabsorbed depreciation unlimited. Shall we discuss few questions now? Before going to the questions, I will tell you one more point. Yes, it will take 5 to 10 minutes time. Listen, I will extend some 15 to 20 minutes also today because we started late. Okay. Now, here observe whatever the slides I am showing. Here we have to calculate what, ma? Capital gain. But that is only what, ma? Exempt, right? Listen carefully. We have to calculate capital gain. That is exempt. But in future, if that is required to tax, the same amount only we have to tax. No need to calculate in the year of violation. whatever that capital gain required to tax in this year, that is exempt. In this year only, please compute. That is only what we have to tax in this year in the hands of whom? Successor. So now we have to calculate capital gain, right? In future, if that is required to tax, many are thinking that, sir, we have to calculate capital gain in the hands of successor. No. Whatever they taken exempted, please compute that. Yes, how much exempted earlier, that is only now we have to tax. For the purpose of computation of capital gain, the many are thinking capital gain means only one computation. No. Remember, if you want to calculate the capital gain, yes, we have two things. We have how many two things. The first one, yes first one, capital gain on non-depreciable capital assets. What is that? Non-depreciable capital asset. So next we have an capital gain on depreciable capital asset. I think I given in notes. Depreciable capital asset. Sir, depreciable means nothing but what, sir? If any asset which you use it in your business or profession, that is only called as what? Depreciable. That is only called as what? Depreciable. Remember, so depreciable capital assets related capital gain will calculate in section 50 and this is in section 48. You know very well this one. You know very well this one. What is that? Gross sale consideration. Yes, ma? What is that, ma? Gross sale consideration minus expenses, transfer expenses. You will get the net sale consideration minus what, ma? Cost of acquisition minus cost of improvement. Then you will get what? Gross capital gain minus exemption net capital gain. You know this very well. But this you have to know. Ma, I will show you one question. I don't want to show the computation. Just I will show you one question. Listen. All of you just listen this question. Yes. Conversion segment. Ma, please take. Here, who converted? Who converted into in which form? Ma? I think a partnership form converted into what? Company, right? Listen, their partnership form balance sheet they given. Conditions are satisfied. Partners settled also in that equity shares only in their ratio. All the conditions are satisfied. So now in this year, capital gain is what? Exempt. In whose hands, ma? Partnership form hands. But remember, in that next year, partners transferred their shares. Means, can you tell me, in the year of violation, that is taxable in the hands of whom? Successor. Now, whatever the capital gain they taken as an exempt, now that is taxed in the hands of whom? Successor. Now, this capital gain we have to calculate, that is only now we have to tax, right? Now, you have to observe, capital gain we have to calculate on what? Capital assets. In the balance sheet side, what are the capital assets? Machinery is depreciable capital asset. So that's why you have to calculate by using the section 50. Capital gain you have to calculate by using section 50. Investments are capital asset, but non-depreciable, you have to follow section 48. It is not a capital asset. It is also not a capital asset. It is also not a capital asset. Now you can see the computation. You have to calculate the capital gain. Yes, invest only capital gain. Can you tell me? We calculated for two assets. Many are asking this question also to me. Sir, capital gain you are not calculated on stock. Okay, go and sit in foundation again. Oh, no foundation, LKC. Start from beginning. Okay, next, debtors, bank. These are not a capital assets. And okay, if you have a doubt regarding to this, that is okay. Sir, why we have followed different sections, sir? Because investments non-depreciable section 48 and machinery section 50, because it is an depreciable. Now, I will tell you how to calculate the capital gain in section 50, sir. Yes, ma. Listen carefully. Long ago we purchased one block of asset. We purchased long ago. Every year we claim depreciation on that, right? 10 lakh worth we purchased. But now in our books, the value is too low after claiming depreciation. Listen. Yes. Now in this year, what is that opening WDV plus what is that cost of additions? What is the cost of additions? If anything is sold during this year, this is only what depreciable value minus, please calculate depreciation. It is only what closing WDV. So this is only we discussed as section 43.6 WDV format, right? WDV format. Yes, listen carefully. Now 10 lakh we purchased, but now last year closing WDV, now this year opening WDV is maybe 3 lakh. Because of what more we claim depreciation every time. So now depreciable assets, whatever the depreciation we got already, that is reduced from the assets. Simply now opening WDV will represent the what current value, right? Ma, example, 10 lakh we purchased. Last 5 years we claim depreciation. Now opening WDV will be present market value of that asset or historical cost, present market value, right? Okay, if anything is unfortunately added to this block, now you can take both the things. Here, if any depreciable asset is sold, please take the sale consideration. Yes, minus, very important, sale consideration. Yes, from that we can reduce the what transfer expenses. You will get the net consideration, right? From that cost of acquisition, if you are taken, that is completely wrong. That is a long ago cost. How you can take the cost of acquisition as an 10 lakh? What is the present cost? Opening WDV. If you are added any new asset to that block, that is only, this is only you have to take it as what cost. So minus opening WDV. Yes, ma. Opening WDV plus what ma? Cost of additions, we have to take it as what cost in this. So after removing this, you will get the, remember, always short-term capital gain or short-term capital loss. But listen, these values are always marked to market, because we are not taking any long ago values. These are the mark to market, the present market value related value only we got. So that's why in section 50, if you computed the capital gain, always we have to got the short term capital gain or short term capital loss only. Okay, I will prove that point also. Yes, ma. Machinery, you can check the machinery WDV given. Here the machinery is sold for the 1,20,000 to that company. 1,20,000, but what is that? What is that? Opening WDV we reduced it as an cost of acquisition. Ma. Please take here how much they given. 1 lakh. 1 lakh we taken. Yes, if you remove the 1 lakh, net consideration also 1,20,000. 1 lakh if you remove, how much you got as an capital gain, ma? 20. That we given directly short term. Why? Section 50 capital gain, if you computed, end result always we have to give it as an what, ma? Short term capital gain or short term capital loss. If I am saying this formats, okay, you can also easily identify. You can remember the structure. But in an exam, if you want to calculate the capital gain, this depth is required. Remember, in the balance sheet asset side only we have to check which are capital assets. You can identify the what are that capital asset. That too, on that capital asset, if that is depreciable, apply 48 and if that is depreciable 50, non-depreciable 48 you can apply. Ma understood? Now listen here how much capital gain we got now, that is earlier exempted in the hands of whom predecessor, now we have to tax in the hands of successor. But stock, tell me, yes, stock 70,000 value we transferred to that person for 90,000, that is taxed under which head? PCBP. But it is assessment year 25-26. Okay. Please change that if you have. Ma clear? Online. Online. 22 we can discuss. Ma 22. Remember, can you tell me BCG Private Limited converted into LLP? What is the section ma? 13B. 47, 13B. All the conditions are satisfied on that time. What is the previous year? Previous year 24-25. All the conditions also satisfied. If all the conditions are satisfied, can you tell me predecessor losses we can set off in the hands of whom? Successor. Can you tell me what is that company losses? 48 lakh business loss, 25 lakh what ma? Unabsorbed depreciation. Now, yes ma, on that year, yes, LLP profits also there, 85 lakh. Can you tell me LLP profits how much is there ma? 85 lakh. Now 85 lakh can be reduced by the first preference, please give it to business loss of the predecessor. How much ma predecessor business loss? Ma 48 lakh. Next success predecessor unabsorbed depreciation 25 lakh. Tell me how much? Sorry, 12 lakh. 12 lakh. That means how much benefit we taken ma? Please do total of the benefit of setup we taken. 70. Tell me 73 lakh. Right? Now yes. On that time all the conditions satisfied, we taken the setup. But in the next year, what is the next year? 25-26. What happened? Two partners are they are shareholders in that BCC. Now aggregated how much ma? 50.75. They resigned. Now condition violated or not violated ma? Violated. If the conditions are violated, what we can do? Ma, if that conditions are violated, now tell me what we can do. Simply, earlier whatever the benefit is got, that is taxable in the hands of successor. In which year? In the year of violation 25-26. Deemed income how much we have to create? 73 lakh. That is only question. Yes ma, simply 73 lakh we have to create it as an what ma? Deemed income in the year previous year 25-26, assessment year 26-27. Easy or difficult? This question is given for 7 marks in December 23 or June 23. So now we'll discuss the last attempt question. We'll discuss the last attempt question. You can expect this type of questions even though you felt it as a speed also. Listen carefully. Okay. Now, so what is that partnership form? Okay, Arinath. How many partners are there, ma? 3. Their profit sharing ratio 3:2:1. Now, this on the first day of the previous year, this partnership form taken over by the company. What is that year, Anna? Ma, what is that year? 25-26. Previous year 25-26, that conversion happened. So they are taken all these assets and liabilities at what, ma? Book value. So one condition is satisfied, right? All, yes, ma, books, all the assets and liabilities we have to transfer. Ma, capital account ratio also given. What is that capital account ratio? 10:8:6. What is that? 10:8:6. Why this is required? We have to get the shares in the company also in the same proportion. All together, at least 50 we have to have. Understood? Now, ma, Anand having the how many shareholders, ma? Earlier 2. That company having the 2 shareholders A, B. They have an equity share capital how much, ma? 10 lakh. Company given the equity shares in the same capital ratio or not, please check, yes, because that is one of the condition. Okay, now tell me, yes, ma, previously 10, ma, previously how much shareholding, ma? 10 lakh. Now what is a newly given the shareholding, ma? Tell me total 10:8:6 total 24, right? 24 lakh. Totally how much, ma? 34 lakh. Ma, this 10 lakh is earlier. Each, sorry. Each 10 lakh. Yes, ma. Totally how much, ma? Earlier 20 lakh. So each word is important. Okay. Next, ma, 24 lakh we allocated to new. Totally 44. Now our shareholders, that means newly who become the shareholders from the partnership form, they need to hold the share capital in a capital ratio satisfied, but all together they have to hold how much, ma? 50. Now we'll calculate whether they held 50 or not. 24 lakh divided by how much, ma? 44 lakh into 100. How much holding they have, ma? More than 50 or less than 50? How much? 54 point something, right? Okay. Now remember, all the assets and liabilities transferred, capital ratio condition also satisfied. Third one, yes, ma, we got only what, equity shares, and we are not receiving any consideration. That also more than 50%, and other condition, lock-in period condition is deemed to satisfied. Now all the conditions are satisfied, so that's why can partnership firm can get the exemption under capital gain chapter? Yes. They are asking first, please analyze the every condition. First write it down these 4 conditions. They are saying clearly all the conditions are satisfied. So that's why partnership firm not required to calculate the capital gain. Next, second question, what they asked, suppose X shareholder is sold the entire shareholding to whom, Y. No problem. Ma, X also new. X, Y, Z. One person wants to, yes, ma, one person wants to what, ma? Retain. One person wants to what, ma? Retain. Can you tell me? Aggregate shareholding, how much they are required to maintain, 50%. So now, ma, remember, previously they haven't 54 altogether. One person removed also, but they are transferred to whom, Y. So now, can you tell me, is there any impact because of this transfer? No. Ma, altogether transfer done. How many are transferred here? 3. but they are required to maintain altogether how much for 50%. Here they maintain. Listen this. Remember, aggregation not less than 50%. That their shareholding continues for how many years, ma? 5 years. Now, if X sells entire undertaking to Y, still remaining partners are holding not less than how much, ma? 50%. Now also what? 54% only something will continue. But one person exited from the company also, no problem. But if X is sold to outsider, condition is violated. Now, another, in this question they asked the, sir, instead of the shares, they allocated the debentures. Remember, only we have to receive the what? Shares. If you received any other thing other than the shares, that condition is violated. Now, partnership firm required to calculate the what? Capital gain. Sir, very easy question. But at the time of entrance only, you can check this condition. All the partners required to become the shareholders. They become, and in which proportion they need to held on the time, on the date of succession only they need to held. Clearly you can see this word, on the date of succession all should transfer. Okay, 3 are there, 3 also shifted. And they need to maintain on the date of succession in capital ratio. But after that they can rearrange. One person can exit, but at the time of exit he needs to transfer to their partners. Earlier, who are there, ma? X, Y, Z. Okay, now X transferred to Z. Altogether the shareholding is same maintained. Now that is not reduced. Now, one more question I will explain in this concept only. I will tell you one more. This is a question. MQP. I am expecting this question in the next attempt. Clear? Now, listen carefully. Even though we are taking the much time regarding the conversion questions also, but if I am telling the concept, you will get some doubts also. Okay, what he got the doubt? If conditions understanding may be different, upon the date of conversion, you need to get the shares in the capital ratio. But after that, that can be rearranged. All required to shift. Now, here what happened? You will get more clarity in this question. Listen. Patel and Co Limited. How many shareholders? That means one company having the 4 shareholders. They want to decide, they want to convert into what, ma? LLP. So nothing but the company, private company wants to convert into LLP. Possible. Ma, how much depreciation is there, ma? 5 lakh. How much loss is there, ma? 10 lakh. Yes, sir. But Bimal is a negative character in this question. Okay. The Bimal, he does not want to continue in the business. He wants to transfer the shareholding to whom? Arun. Okay. No issue. Explain briefly what are the conditions we have to satisfy if the company required to get the relief on what, ma? Capital gain. Can you tell me how many conditions, sir? 1, 2, 3, 4, 5, 6, 7. We discussed already. If these 7 conditions are satisfied, then who will get the relaxation, ma? Predecessor. Predecessor means in this question, company. Now, and they are asking timing of exit. Can you tell me? Timing of exit. What we can say? Before the conversion, if he exited, then it is not an issue. Why? After conversion, if he exited, maybe he transferred his shareholding to any other because he don't want to continue in the business. Can you tell me timing? We can suggest the, yes, here you can check that word. I underlined also. In case Bimal don't want to continue become the partner in LLP, he must cease to a shareholder in the company itself. That means in company itself he can cease. Cease means nothing but what, ma? Bimal shareholding who will get? Arun. So nothing but before conversion itself, if we remove that fellow, now he can transfer his share to some other shareholder of the company before conversion into LLP. Already I given this at the time of explaining the theory also. Clearly they can ask this twist also. Sir, maybe you can ask it out. Sir, what if, sir, after conversion, he don't want to continue in the business, how he will shift from the company to LLP? Ra? Remember, Arun, next one ma, Bemal, next Chera and Dhawan. Okay. Now, this is an company shareholders. Now, upon the conversion in LLP also, how many required to get? 4. But clearly, Bimal said what? I don't want to continue in the business. That means he will not shift it to which company? Sorry, which firm? LLP. So, okay, if you are in the same position, okay, now, who will continue? A, B, B will not continue, sorry, B, C, D. Now tell me, how many are become the shareholders here? Sorry, how many are become the partners? The shareholders in company required to become the partners, how many ma? 3 only. And one more thing, all these 3 fellows are getting the share from the LLP, but he will get what? Cash also. Consequently, who required to pay the capital gain tax? Company. So instead of this, we can do the tax planning. What is the tax planning? First, yes, how many are there in company? Previously, A, B, C, D. Will remove the A by way of taking the shareholding. Now reconstitution is done. Who are there? A, C, D. Now we can convert that into LLP as in partners. Can you tell me how many are right now? A, C, D. That means all the partners are all the shareholders are shifted. Yes. All the shareholders, whoever is there, all are shifted to LLP and they received only what ma? Share from the what? LLP. Now simply they will get the what ma? Capital gain exemption. So timing of exit, before conversion done or after conversion? Before conversion. After conversion, if any change in shareholding done, what is the loss to company? Company required to pay the capital gain tax. Ma understood? So this question is still now not tested. At any time they can test in our examinations. Clear? Now. So conversions related we can close our discussion. Conversions related we can close our discussion. So now we have to discuss the 2 more concepts. What are that? What are that ma? Amalgamation as well as what? Demerger. Amalgamation as well as what ma? Demerger. So can I upload it or can I take it now? Regular class only I want to upload, not Evo also. The detailed discussion is required. So that means everything 1 hour amalgamation, 1 hour the demerger portion I will upload it. Because if I am taking also 1:30, I have a class at 2:30. So if I am taking these classes, preference over that classes, that is a different issue also. So now I will upload part 2 for the business restructuring. So on Sunday or Monday I will upload. Transfer pricing itself now also pending. I will upload amalgamation demerger concepts in the YouTube as an part 2 of business restructuring. And yes, these 2 also important. The preference, at the time of doing the preference, first start with the slum sale, then after conversion, then after demerger, not amalgamation. Okay, demerger, then after amalgamation. So now, sir, in amalgamation, sir, what are the questions preferentially I have to do? Yes, I will give an idea. I will give an idea. Yes, if you want to do that questions. Question number 1 is not required. Question number 1 is not required. Question number 2, yes sir, this is an MQP question, till now not tested, but they will not give all the combinations, sir. They will not give all the combinations. Listen, any combination they will give for that 7 mark. Yes, any combination they will give for 7 mark. After listening the concept, you can watch it. Sir, whatever the part 2 I am going to upload, that part 2, if you listen, every question also explained in a regular way. So your practice also can be done. This is first question you have to do on the amalgamation. It is a question related to what ma? Amalgamation. And the next second question, 2 questions only I will say in amalgamation. Second question, question number 3, it is a 1 minute question only if you know the concept. This is also second question. These 2 questions are enough in the amalgamation. These 2 questions are enough in the amalgamation. Next, in demerger, listen, yes, question number 5, you have to do many times they given in that exam. Question number 2, Dona. Exam or MQP also many times they given. Demerger question please do. Next demerger question, you have to do only 1 question, everything will be covered. That is question number 8. 4 questions are enough in the demerger. Sorry, 4 questions are enough in the amalgamation as well as demerger. Can you tell me question numbers? Repeat ma. 8 as well as what? Question number 5. Demerger these 2 questions. Amalgamation 2 questions are enough. If you do these questions, automatically the remaining things also you will get in clarity. But while explaining the concept, first I will tell you amalgamation. In the same way demerger concept also I will explain in that video. Okay. Next, these 4 questions related explanation also I will give it to you. But question number, which one? This will take much time for explanation also. But for understanding it is very easy. This section numbers and content if you know easy. But conversions related and the slum sale only covered in this part. In next part we'll take these 2 as an uploading. Okay. Done. We'll close for today. Tomorrow is an last day we can take. That is an advanced tax and interest. Then after I will upload some parts of the appeals and ICDS etc. I will try to upload it as an videos.